G'day traders, welcome to a wrap up of the markets for Thursday the 24th of October. You can see here again another fairly tight ranging day. We've had a few of these over the last few days. Let me just bring up, before we get into the 15-minute chart, let me bring up a daily chart just to sort of explain a few things as to what's happening. What we've seen is in the past, over the last few weeks and certainly the last few months, we've seen some quite volatile markets, some good moving, ranging markets, which obviously when the market moves more, that's going to provide more trading opportunities. When you get a day like today, where it's in a tight range, it's just, it's almost one of those days where you really got to sit on your hands. We've had a few of those lately. And the reason why that is, it's not anything to do with really the time of year. This time of year is normally good trading. Leading right up until Christmas, we'll find it's good trading as far as traders are there available putting contracts into the market. However, what is slowing down the market at the moment is the fact it's at its highs and breaking new highs. This is the daily chart, so we can see right back to what's happening for pretty much the whole year. And as the market comes back up and looks to break its highs, what it does, it takes the fight out of the market, the sort of the two-sided fight, and the markets really slow down. So whenever the markets are pushing at highs and going higher, you'll see the candles really shrink. But when the market's pulled back or off its highs, down through here, or even ideally right back here, and coming right back off its highs, all of a sudden you're encouraging this battle between the buyers and sellers coming from both sides of the markets. And you can see a lot bigger candles down around here, all of a sudden comes back towards the highs, because at this stage this would have been the high back here. Candles starting to shorten up, and you can see how tight they get as we're hanging around these highs. We pull back, candles increase, get bigger and bigger, all of a sudden come back to the highs. There's some bigger candles here, but normally you will see them smaller. And as they come back, again, got bigger and bigger and bigger. Now we're seeing the candles shorten right up again. So it's just the fact is, at the moment we keep on coming back at these highs, and we're getting these periods of slower markets. But all of a sudden, if you see the markets come back and sort of break its lows, and even break its lows again, and get right back into the range, that's what we really like to see. And we'll see continuous, really good flowing markets then. But of recent times, it's sort of, as we keep coming back at these highs, that's what's slowing it down. So just so you understand the process behind it, it's not just anything within the market. It's not just random. It might seem like random occurrences and things like that, but there's always a reason behind everything. And if you understand this, that as soon as we come back towards the highs, you expect the markets to be slower, and you sort of already put that in your mind or in your mindset as far as, okay, there's going to be less trading opportunities. Just to it's one of those times of the year just to be wary and know I'm not going to force the trades. Then that's good information to have. So for that reason, keep an eye on the daily chart. It's pretty much, for myself personally, I don't look too much in the daily chart as far as trading areas, but I do look at it as far as, okay, what's happening in the overall market as far as potential volume and width of the market. So it's handy for that. Okay, so we'll just put that away. Let's bring over the 15-minute chart. This is certainly what I personally use as far as trading areas, support and resistance areas. And like I said, many times, it doesn't really matter what longer term chart you use. You can use daily charts if that's what sort of works for you. I used to in the past. I've used daily 1 hour charts as well, but for me, I've just found 15-minute charts is that sort of best combination of, it's long term, so I can see what's happening over the last few days or even few weeks if I want to, but it's still short term enough to sort of really get in and still see the price action where it's reacting. And I find it a great market to get these blue lines, these support and resistance, or horizontal support and resistance areas, which is so important to trading. Okay, we spoke about yesterday, Wednesday, we were just bouncing almost exactly between these two areas, and we knew of these two areas before we started the market. So we knew exactly what was going on. That's what I mean by most things within these markets is quite predictable if you sort of take the time and effort to sort of look around, understand the daily charts, understand support and resistance, and then you can sort of know of things before they start to happen. Okay, so leading up today, again, we've got this support and resistance area here, which as we're coming down, we're going to be wary of and see what it wants to do around this area. So I've marked this on the 1 minute chart. We'll go over and have a look at it soon. Okay, so let's flip over there and do that now. So here we are. We've got the 1 minute chart. There's that blue line I'm talking about, that major support and resistance area from the 15-minute chart. And you can see, we've got a little bit underneath it. It's not a perfect science. As soon as we got underneath like this, I wouldn't call that, a break of the area and off they go. It's sort of, okay, if they come back, test it, and then push off it again, that's significant. But the fact is, they haven't really pushed through it. That they've hung around, they've tried to get above it, then they've bounced off it again. About 3 times they've bounced off it before going up again. But all in all, it's been quite a tight day of about 5-6 points within a range, which you need at least 6-7 point trends and then a pullback to really start looking at any trading opportunities. So today, quite slow as far as opportunities, but that's all right. We understand the reason for that and as to why that is actually happening. You'll see also this white box here. So in a couple of the other market wrap-ups, I've talked about it, and we call this the pre-market box. And you'll notice in the last few videos I haven't necessarily put them on there as well, because there's been not a lot happening within the charts, quite a tight range, and it hasn't really been influential on the day. But definitely within the trading room, and before we start the market, we're drawing in these support and resistance areas, we're drawing in these pre-market boxes, and we're always referring to them and making note of them, even if we don't always refer to it in the wrap-up. It's certainly something we do in real-time trading, but because I hadn't spoken about them for a few days, I did want to bring it in and show you what we're looking at. So what we've done is we've marked a significant high point, which is there, so that's the top side of the box, and the lower side we've got here, which is a little bit into the cash market. I go up till 10 o'clock. Okay, look for a significant low and high point from pre-market through to 10 o'clock, because 10 o'clock's like the unofficial opening. Even though 9:30 is the official opening, what happens is economic news comes out at 10. So many traders, banks, institutions, they'll wait, let the economic news come out, let the market sort of settle down, try and find a direction, and then from there they start looking for trading opportunities. So it's common ground or common knowledge that 10 o'clock is like that sort of turning point or unofficial opening within the market. So I let it go till 10 o'clock. At 10 o'clock we go, okay, let's mark the significant high and low areas and use that as some boundaries. Okay, so we marked in this low area, and now we're looking, okay, can the market not only break through the support and resistance, but can it get through this area and really consolidate and show some trends? And then if it can do that and get outside and start pushing down, we're going to start looking for short or selling opportunities. Okay, this is the sort of thing we talk about within the trading rooms. It's always about predetermining where and what we're going to trade. It's not we're not waiting for the market just to do something and react to that. We go, okay, this is what we expect to happen, or this is what we want to happen before we even look at the trades. Okay, so we're always letting the market come to us as opposed to us chasing the markets, and that way we're in control and taking the best trading opportunities that way. So the fact is it's hung around the support and resistance area. It hasn't got outside the pre-market box, and it's a tight range. So overall, not a lot to speak about today, but really wanted to use this market wrap up just for more. If we can't specifically talk about what's happening within this daily intraday market, let's talk about a few longer term implication as far as the daily chart, support, resistance, and this pre-market box that we use in the trading rooms. So hopefully you got something out of that, and that's it for the wrap-ups for the week. We just do these Monday through to Thursday. We'll be back on Monday to do it all again. Have a great weekend.